Yeah. What did you do? Sign off.
Yeah, put those
Yeah.
signatures up, so.
Did you see?
No, it's
listed
good.
it? Or.
I saw that, that's awesome.
$120 less in the back door.
Don't mind me, Mary.
What, less?
Wait, what?
Good morning. Good morning. Hi, Kate.
$100 just closed.
Yeah.
Come on out.
A week ago.
Grab a seat, babe.
They
What's for
listed
breakfast?
it again without doing it.
You're so funny.
For $100,000.
I love it. I love
I
it.
need to think of. Oh my God. God, they're thinking maybe.
I was recommending them too on this sale, so I said, you know, I probably.
Any gift card giveaway, wanna participate in gift card giveaway?
Yes.
Of course.
Just drop your name down. I'll need a old school.
All right, good morning, good morning. I know we are a little bit more intimate today, you know, we were just talking about because we're a little bowled out from yesterday. All right, guys, well, happy Wednesday, good morning. Zoom. Good
Morning,
morning.
Jenny.
Good morning. I know, love it, love the enthusiasm. Well, if you don't know me, my name is Mary King. I am bold. Yes, you are. And thank you. So we have actually we have several guests with us today. We actually have a guest speaker from House America that we will introduce you to a little bit later. We also have a couple agents from our sister office as well, from RTV, Rachel and Rebecca. Thank you. And they will be sharing their listing as well. But we'll kick off. Happy Wednesday. Thank you for joining us today, and let's roll. You guys ready? Hold on to your pants. You know what? Rachel, please.
Be stubborn about your goals and be flexible about your methods.
Awesome. What does that mean to you?
Put her on the spot. You know, to just keep going.
What happens to my guess?
Yeah, I know, right? Like, yeah, just keep going and set your goals, you know, make a schedule and just keep it going, you know,
Yeah.
focus on it, have tunnel vision almost to reach that goal.
I love that. Thank you. Yeah, that's right. What is it in our business? We always talk about consistency, right? And then we talk about making sure that we're constantly staying on track, making sure that we are time blocking, making sure that our schedule is up to date and moving your schedule around. And that this is something that we actually, one of my biggest ahas in the last couple of weeks that we actually mastermind a little bit around yesterday as well, is that I realized that I have a solid schedule and I think I'm really good in time blocking. My fault is moving my schedule, my task around. So instead of me doing something today or didn't do it, I don't move it. I just say, I'll get back to it. And I guarantee you, I never get back to it. And what happens, it falls onto the wayside. So now I just move it forward. Or the other thing is just execute it and get it over with, right? Especially the things that you don't want to do, get those done first and then do the things that you do want to do. So be stubborn about it. But thank you. Awesome.
Adjust your sails.
What's that?
Adjust your sails.
Yeah.
SAILS.
Yeah, absolutely. We got to go the way the waves are going to go and how the wind's going to blow, right? In our market, in our business, we have things coming at us left, right, and center. I mean, that's the honest reality. There's not one day that is exactly the same, unless if you're on vacation, then that's a whole different ballgame. But we have to be able to adjust. We have to be able to be a chameleon and just kind of adjust to our environment. So thank you for that. And then thank you to House America Financials for sponsoring our amazing breakfast this morning. Thank you for always, making
I'm
us
moving right now.
bigger.
I'm not
Can't do that to me.
It's Wednesday. I gotta make it different.
Thank you. I appreciate that. Yes. Okay. Brokers open. You guys want to share your listing? Because I know you will have to go. Yeah.
Is the camera here?
Yes, camera's right
Okay,
here, but
great.
they can see you.
So we have this property on 921 Summerlin. It's open for brokers open today, and there's going to be a twilight opening too as well. So if you have clients that you want to bring by and have them look at this property, it's been on the market more than one time. It sold recently 2 months ago, and it was completely redone. So it's a beautiful listing. Come on by. It's above Myler and Summerlin. The price has been adjusted, and I think it's ready. The seller's ready to sell, and the property is ready. So it's vacant. There's a Supra. If you can't make it today for the brokers open and or make it for the twilight, you can go anytime. And that's pretty much it.
What's the
What's the size?
Okay, so the property is a 3-bedroom, 2-bath. It's a little bit under 1,100 square feet. The lot is about 4,000 square feet. It was built in the 1960s, I believe. And the price is $799.
Nice. And the address?
921 Summerlin.
And that's 11 to 1, correct?
11 to 1 is the broker's open, and then the twilight is from 5 to 8.
Okay, perfect. Awesome. Thank you. Appreciate it. Thank you so much. Anybody else that has brokers open that needs to pitch or share before you take off? No? Okay, sounds good. Didn't I tell you to behave today? I know, right? Okay, Bucketville shout outs. I want to shout out to the office, Natalie, Jenny, and the agents that was here as well. Yesterday, thank you for holding down the fort. And as always, making sure that all of our agents are taken care of. So I do appreciate that.
Shout out to this office and our sister offices in Long Beach Coastal and South Bay. Together we made number 3 in the nation, the most attended bold currently nationwide. So congrats,
Yeah.
that's pretty awesome. We jumped from 20-something people. The coach, Michael, was nervous 2 weeks ago to I think 70 people attending.
Wow,
Down
great.
at the DoubleTree Hotel. So it's so awesome and great to see all of you guys there, pumped up and gonna make it rain very soon. So.
Yeah, no, well, actually, speaking of making it rain, we saw the board. So just week 2 alone, we saw the boards and every single team has listings, buyers, agreements. I mean, everyone's already killing it. So as you know, the program does work when you do put in the effort, right? So thank you for that. Yes, we're pretty excited that we are number 3 in the nation. I mean, it just goes to show you the dedication that we all have here in our region, so.
I want to give a shout out to Mary for our snacks during.
The goodie bag.
Don't get used to it. No, we completely understand. I know. Well, it was one of those things we have to get more creative for a lot of our agents.
I want to give a shout out, sorry, Manny. I want to give a shout out to Mary and Hallie from the Long Beach office for hosting Ignite, because with both going on, it's really double duty and they're showing no hesitation to getting both done. So shout out to Mary and Hallie.
Thank you. Yeah, that's a team effort, so I'm taking full credit for that.
Oh, there
Thank you.
was a social media class yesterday, and it was
Yeah.
on the TV, and I came in to eat my lunch, and then I was like, oh, wait a second. And so I was listening to it, it's actually really good. There was like 100 people on her.
Yeah.
And she was like,
She's
really
awesome.
knew what
She's
she was
amazing.
talking about. She does coaching on her social media, but if you missed that, I think she might be doing another one. We could probably bring her in again, but it's really good stuff.
Yes, and it is recorded, if I'm not mistaken.
That was a good one yesterday. I
Yeah.
watched it too.
Yeah. She's a big agent of Northern California and she used to come to our offices quite often. And then she just got married and I think had
Yeah.
I'm not sure if 1 or 2 babies by the way, so she's got busy with that. She's incredible. Yeah, she's pretty awesome.
Yeah, and again, all these classes that we are having, it is in our weekly emails, it is on our calendar, so at any given time, and especially when we have classes this big, sharing with all of our offices, we will turn it on, it is gonna be in the training room. Please just pop on in, don't be shy, and we'll touch base on a little bit more about a lot of fun events that's coming up too. So we're staying busy, leadership, staff, ALC, let's just say that we're all working hard for all of you, so. And then
We
Emily,
still on
can you-
shout outs?
Oh, no, go ahead. You're good. Go ahead.
Shout out to Patty for getting me through this hell of a deal.
Kicking butt,
it was
Patty.
the lender put us through some ups and downs. He didn't tell us that the sale of the home was the purchase of the home was contingent on the sale of the client's home until 7 days before closing.
Yeah.
And boy, has Kevin learned from this for sure.
Yeah.
Real
And
quick,
shout out
within
to
a
Robin.
week.
And shout out to Robin for helping us.
Love that.
Yeah.
Yeah.
She did it in 7 days. She helped us close the listing in 7 days. She was quick.
And I was talking to Kevin about that. We were doing brokers a couple weeks ago. And he was telling me about that scenario. And whenever your lender is not calling you back or saying, let me check with the underwriter, 9 out of 10 times something's wrong. And they don't want to tell you. They're trying to buy time and figure it out. Which as long as they're open and communicate it, I'm sure it's not a big deal. But when you try to hold secrets and hide behind the bushes, it makes it worse than it needs to be. And he told me about that, and I called it right there at the brokers. I'm like, yeah, it's contingent.
But
So,
that's also why
Yeah.
we have our preferred partners that, that we vetted and making sure that, we do have that open communication and trust. Because I wouldn't want Ish to tell me, I'm gonna check with the underwriter, because I'm gonna call you out now.
Yeah.
Like, you said, if you're checking with an underwriter, there's something's wrong, so I need you to tell it to me straight, so I can tell it to my client's side.
it's all about communication.
Good job, Kevin.
Good job, Kevin.
Good job. Congratulations, so happy for you. Keep it coming, make it rain, make it rain.
He's
Alright,
gonna be
so-
closing two, he closed 2 on Tuesday, and next Tuesday, he's gonna close 1, total of 3 already.
3. Wow, you know what that means? Happy hour on Kevin.
Yep.
We can answer that. So you just let us know where to show up, but you need to bring your credit card, okay?
Yeah,
He graduated the program. Congratulations, Kevin.
Congratulations.
Elks Lodge, everybody to Elks Lodge.
We're always here, we're always here. Awesome.
I almost became an alcoholic with this transaction.
Only at LA Harbor. We're gonna just start our own AA, I swear. That's right. But you know what? We're not quitters though. So I don't know. Okay, so yes, Emily Miyamoto, she actually came, she joined our office. She's also a nurse, but she is very, very hungry. She's ready to rock and roll. And you'll actually get to see her this afternoon as well. She'll be popping in right after her shift. So
Awesome.
we're super excited to have her. And
Oh, that's today.
yeah, that's obviously today. So Bill Greene is with House America Financial. He's the exec director of business development, and of course, Ish is our wonderful lender. So we'll definitely get a little bit into it in the mortgage minute.
Yeah.
Now let's have some fun
Have fun. That's what I like to talk about.
Yeah.
I'm gonna take myself out.
with Kevin's happy hour.
Kevin's happy hour. I'm there, Kevin. So I'm gonna have Bill take over majority of the mortgage talk today, but I'm seeing a lot of houses stay on the market a little bit longer. A lot of properties aren't getting multiple offers anymore. So I thought to myself, what group of people with what type of loan has kind of been overlooked for the last 18, 24 months? Anybody?
FHA.
Nicole, exactly. FHA and VA, they've been left behind in the cold. You know, with rising interest rates, FHA usually is lower than conventional when it comes to the rate. Yes, there is mortgage insurance, and there's stuff to talk about, thank you. But it's getting back to the government loans, because I have a feeling if you have these buyers that have been on the fence or trying to buy and getting beat out left and right, they're exhausted. They took their break. Now it's time to revisit those people. They want to buy a house, they just don't have the huge down payment, or they don't have the ability to pay cash above appraisal. And I have this family that I've been working with for 3 years. And one of my very first leads I ever got at my old company, now they're with House America. And they did everything right. They saved, just to get to like a $600,000 purchase price. And then now everything's almost $1 million. But in that same time, they're still the same jobs. They both make a little bit more money than they did before. We have a little more savings. So why not revisit your clientele that have been on the fence or have been overlooked? Because there are true benefits to the government loans. You know, FHA has a minimum down payment requirement of 3.5%. I'm doing a lot of FHA buyers who are actually doing 5% down. The reason why is you can leverage that 1.5% in case you have a low appraisal. Now you can qualify them at 5, make sure they qualify at 3.5, because if the appraisal comes in low, you can always bridge $7,000, $5,000, $10,000 and have an open communication with the seller. Especially if the seller doesn't want the property to hit the market again. Rebecca, your seller doesn't want to have the property hit the market again and have it wait there. You know, they want us, they are motivated to sell these homes.
So you don't have to do 3.5, you can do 5, you can do 10. Credit score minimum for FHA is 580. Typically, you have to put down 10%. Who can tell me on an FHA loan, if you put down 10%, what happens to the mortgage insurance?
They can pay it.
The FHA mortgage insurance actually goes away after 10 years when you put 10% down. This is something that's not known a lot of people who sell FHA loans. They think the mortgage is there, the mortgage insurance is there forever. It's not. If you put down 10% on FHA, your mortgage insurance drops off after 10 years. Now, this was a great selling point 18 months ago when interest rates are 2.5%, 3%. That means you never have to refinance. But with rates are higher than usual, as we are now, at least they get into the property. And with the current appreciation, they may have an opportunity to refinance to get a mortgage insurance sooner and get a better rate. Of course, I can't guarantee that. We don't know what's gonna happen, but it's the same thing with VA clients. VA clients, their debt to income ratio, there's really no limit as long as they can pass the residual income test. Does anybody know what the residual income test is? Bill, you can answer that. You may have forgotten? Anyway, before I step on toes? No? So the VA residual income test is a test that's done through the VA system or our system, our software. You have to make, I believe you have to have $582 cash after all your expenses. I'm talking about your stuff on your credit report, your health insurance, your proposed federal taxes, your childcare expenses. As long as you have $580 per person, the debt to income really shouldn't matter, as long as you can get an approved eligible within the system. Right? It is. And that test can be done at any time, but these options are out there for these clients who have been overlooked for the last 18 to 24 months. So let's revisit them. Let's talk to them again. Because the rates being the way they are, it might be beneficial for them, especially if they have some kind of down payment. The last thing is, with those programs, and Bill, don't yell at me, you might be able to get a credit for closing costs on the interest rate and be able to use that money to bridge the gap before a low appraisal. So there's so many options than just FHA all the way. These loans are there to help people. If you have a major credit event like a bankruptcy, you can buy within 2 years after your discharge. So there's so many options with FHA and VA, and they've been overlooked with the increased pricing and those gosh darn good interest rates. Since we're in a different shift of the market, why not revisit them? It's worth the conversation. So let me know if you have any FHA clients, VA clients that were approved 6 months to a year ago. Maybe they don't even qualify anymore. But hey, they might be making a little bit more money, or maybe have a little bit more savings. Maybe there's something we can do. So but then always talking about conventional buyers, non-QM, anything that's out there, any kind of bank statement loan, there's something we can do as long as it makes sense to us and to the underwriter. There's so many options. Don't limit yourself to just A+ people, because a lot of those A+ people, they're already in their house. Let me know if you guys have any questions about the market, interest rates, clients who want to get pre-approved. I'm sure we can do something for them. So then,
how do you compute mortgage insurance? How do you come up with that number? What number do you
so FHA standard is 0.85%, and I don't know the exact calculation. Maybe Bill, do you know the exact?
That's right.
Okay, so it's 0.85. Conventional loans depends on your credit rate, your credit rating, and how much money you're putting down. Sometimes it's 0.15, 0.2 with really good credit. Sometimes if you have really bad credit, it can be 0.5, 0.6.
Is there a way that the mortgage insurance can go away sooner?
Only
if you can prove down the road you have 20% equity in that property.
Sure, you can definitely refinance to get out of that. I always say maybe contact, depending where rates are, maybe you have a conversation with the servicing lender at that time, see what they can do, but more than likely they're gonna tell you how to refinance.
Either refi, or if you've got an appraisal on to show you have more equity in the property, would they accept that?
It's up to the lender. When it goes to the servicing, I really don't have any control of anything anymore, because it's just whatever their servicing company does. A lot of these service companies are umbrellas under bigger lenders.
Yeah.
So they all have their own rules, they have their own regulations. I've never heard of anybody being able to call 1-800-UWM and saying, get rid of my mortgage insurance, and they were able to succeed. But I only know so many people.
So it's a possibility.
It's a possibility, but I'm assuming they're gonna tell you just to refinance with someone within their bank, or you can always give me a call and I can see what I can do for that.
So the refi, and then we showed they had that equity.
Yeah, and then
They
increase
have
equity.
Mortgage insurance, they approve equity.
Absolutely, definitely
Move
doable.
into a conventional.
And at that point, we move to a conventional loan.
That's it, huh?
I think that's cool. I had never heard that with an FHA 10% down. So does that MI drop off automatically, or I assume?
Yeah, it's on the amortization schedule that they sign with loan documents. You literally see it just drop off after payment, at payment 121.
Yeah, I've never heard of that.
A lot of people don't know
Saying
that.
You have to refinance to get out of it.
Yeah.
Yeah, I didn't know it either. So it just automatically drops off.
10% or more, yes. But if you put 3.5, 5, 8, 9.99, it won't fall off. It has to be 10%. So let me know if you guys have any questions, scenarios. You guys know where to find me. Holler at me, email me, call me.
Where can we find you at?
28901 Southwest
Oh,
Avenue. Suite 139. I don't know what my office number is anymore, but just we'll have a conversation. So I'd love to talk to people who have been so disappointed and give them a shot. And this is supposed to be a quick mortgage minute, and it's not.
right.
So let me know if you guys have any questions.
Good job.
Ishmael.
Oh, Brent.
Yes,
I get ready for a haircut, dude.
I thought that this morning.
Oh, okay.
So I wanted to share, once again, Fidelity Total Farm, which I'm sure everyone's using religiously at this point, I'm sure.
As he's looking at.
But I wanted to talk about like the door knocking companion app, because so I've shown the desktop version over and over. You get the farm filters, you can create all these farms, but I don't think many people know there's actually a phone companion app that's actually really good for actually door knocking. And basically you can create these map farms. So maybe if you have an open house, you want to be door knocking around that open house, or if you have a listing or like the red day door knocking, things like that. So I wanted to show you basically, actually, I don't even think it's sharing, is it? Let's see.
Are you on the Zoom?
Yeah, let's see. Start. Oh, there we go. Sweet. Okay.
Okay, I see you.
Thank you.
He was on Grant's phone.
Oh, let's hope your Tinder doesn't pop up. You got it back.
I turned the notification off. I thought I
said that.
Grant is so regretting.
I missed it.
So basically, you have the same system, right? So it's the same account as the desktop version of Total Farm. So if you go to My Farms, you're gonna have all the same farms that you created on the desktop version. But what's cool about it is you can go to walking farms here. And let's say like today after the team meeting, you just wanted to go up to this neighborhood over here and maybe talk about a new listing or for an open house or something. So you can actually select walking farms up here at the top right of the screen. And it's actually going to take you to a map basically. And so you can put in an address. Let's say you have an open house, you can just put in that property address, or you can just kind of find yourself on a map and then see it at the bottom left where it says draw map. So I can select that and literally just run my finger along the route that I want to be walking for that day. So let's say that I just want to start here. I want to go up this J Brook right here and then just down across and maybe just up here. So basically just draw the map area that you'll be walking that day. And then it just takes a couple of seconds. And then also what's really cool is it'll actually give you a breakdown of the property differences in terms of the occupancy types. So it'll tell you which of these properties are owner occupied and then which of them are renter occupied. So I wanted to show you that and then give you, I guess, a couple of ideas of how you could actually use another app that we have called Fidelity Agent One. So as you're door knocking, you can basically see the difference and then use some of those tools we have to try to give them some content, try to capture some leads. So once this loads, I'll show you. So it usually just takes, hopefully not too long, so I don't have to fill the silence.
You can scroll back to whatever else was on.
Double tap.
I wiped
Double
that.
Before he got there.
Grandma, Mary, are you feeling that people are getting back to door knocking again the second half?
Yes, no, absolutely. People is getting more comfortable back to door knocking. We're seeing a lot of agents, requesting tools and resources to go door knocking. So that's happening. A lot of agents going back on Brokers Open. They're putting themselves back out
How is
there.
the public itself receiving that?
The public is also getting more comfortable. last week I spoke to about maybe 15, just kind of random people and, just asking them, how are they feeling about the market? They're like, well, I feel good. And I go, well, how do you feel about agents, coming to your door? He was like, and they're like, oh yeah, we get it all the time. We're starting conversations. So the public's actually feeling pretty comfortable again. And, God forbid, but I'm hoping that, we're getting back to our normalcy. And
So they knock on the door and open the mask on, you better put your mask on. Like they-
yeah, well, I think the safe, I guess kind of the protocol is knock on the door, step back a couple, right? A couple steps, and then if they say, maybe just ask, are you comfortable, or do you have a minute, and are you comfortable with speaking like this, or do you want me to mask on? Right, but I can tell you, I have not met anyone that wants me to put on a mask. I mean, granted, I have a door knock, but I have talked to strangers and they feel pretty comfortable.
It's such a welcome back.
Right, exactly. Some of them even, I'm like, after the conversation, like, do you take hugs? Cause I give out hugs and they'll just come right on in.
Hey.
So,
Nicole told me to door knock and go in the house, but they won't let us.
Yeah.
She sends me out there anyway. Get out there, we're not gonna door. They know who
Good
you
job,
are.
Nicole.
Yeah, good job, Nicole.
That's why Sergio is not here.
Yeah.
Door knocking.
It's true.
Yeah.
He's not door knocking.
He's back in the gardens.
Yep, it's true.
Yeah.
Sorry, man.
No worries. Well, that's perfect. You filled the space for me. So basically see the breakdown. So all the green icons are owner occupied properties and the red icons are renter occupied properties.
Wow.
And so I can finish basically creating this farm, just like go to farm. And then this will actually create that farm in that desktop version as well. So you have it for later. But what's cool about it is it'll actually lay it out in that geographic order that you'll be walking in. So I can select start walking here. And then basically as I'm walking, I'm gonna have the property address. I'm gonna have the owner's names. I'm gonna see when they purchased the property. Some of the data doesn't load all the time, especially once you just create the farm. But after a little bit of time, it'll kind of start populating. So some of these things you can see as you're approaching that door, what they bought it for and when they bought it. So as you're having those conversations, don't be creepy and say their name right away and what they bought it
Hey,
for.
John. Isn't it awesome? You've been in your house for 8 years.
Yeah, exactly. Yeah, they won't be too happy about that.
Question, if they have NOD by coincidence, will it show it to you?
So those are
Other
kind of,
liens or whatever?
yeah, so that would be kind of like a premium feature of this.
Okay,
We can always kind of help populate that for you.
but you have that option technically.
Exactly,
Okay.
you do, yeah.
Interesting.
But then you can kind of have those like leading conversation questions, right? As you're approaching that door, and if you see somebody and they bought it in 1990 for $200,000, maybe ask them, how long have you been in this property? Kind of go down that route. But that's what's cool is you can kind of just swipe through as you're walking. So approach the door, swipe, approach the door, swipe. And as you're actually looking down this list as well, you can see kind of the red icons and green icons. So even before you approach the door, you go, okay, is this an owner occupied property or is this going to be a renter that I'm about to talk to? And then also you can kind of keep track of that conversation. So this drop down here, it's kind of a little grainy, but it basically says set status. I can click this drop down and say prospect, not interested, or maybe even not home. So maybe if I'm going to go back there next week, I can keep track of which homes I was actually able to speak to. And I can actually put in notes too. So if I talk to them and then maybe they said something about something or they have pets or something or a dog and I got the name, I can put that in the notes and that'll actually connect back to that desktop system as well. And then I guess I wanted to show a couple of things that you could use while door knocking that would be helpful.
Welcome to Grant's Tinder, by the way.
Yeah.
So you swipes.
Yeah, use for the motion. Wow. So basically, this is Fidelity Agent One. So these are kind of two different apps. So you can use them at the same time. And I figured what you could do maybe as you're door knocking is use like a seller net sheet calculator for the owner occupied properties. And then for the renter occupied properties, we have a rent versus buy calculator. So basically what you could do is do like a seller net sheet for them right then and there. Say, maybe they bought it in 1990 and they have probably a lot of equity. You could just have this conversation and say, hey, by the way, I can create this net sheet for you really quick and show you basically what you net on this property if you decided to sell that property. Or you can kind of go through and do like a rent versus buy calculator for a property that's occupied by a renter. So I can go in here to calculator and then go to rent versus buy here. And then maybe ahead of time before you're going to door knock, you can kind of do a survey of that area and see what like rents are in the area and then see what the average sales price is in that area. So let's say, for example, the average rent's like $4,000 and maybe a property just sold for $125,000. And then you can just say the assumption is a down payment of 10%. And this calculator is actually going to show a renter basically the difference in cost between buying and renting over an extended period of time. So basically saying if you buy property, you're gonna get like the mortgage interest deduction and you're gonna get appreciation, and rents obviously have that appreciation and cost as well over time. So you can scroll this over and basically show that renter on that doorstep the benefits of home buying maybe, and get them in that process of being pre-approved for that loan. And what's really cool about this app is all the calculators, they come with like an ability to share it, and they'll kind of create a template for you with a PDF with your logo, your headshot, branding and everything. So if I hit the share icon at the top right, basically hit send full report. And as I'm talking to this person, I can say, hey, by the way, I can just text this to you really quick or email this to you and have that value. And then, so here's actually the calculator showing them basically the difference between renting and buying. It's gonna have my information on it. And now I just say, yeah, I'll just text this to you really quick, hit send, and then text and email. Now I have that person's contact information. I put them in my database. Now they have my information as well on a flyer. So it's a really simple tool once you kind of get familiar with these things, but it's obviously just taking the time, and I'm happy to sit down with anybody and kind of walk you through start to finish of how these work. So thanks for the time, and then if you have any questions, feel free to reach out to me. Yeah.
Aha moment. What did we learn? We learned that Grant has Tinder. We also learned, but I mean, would you be, I guess, would you like Grant to come and do a full-blown class for this? Maybe we can put something together. Will that be beneficial to all of you? Bring your cell phones?
Yes, absolutely, so we can get fully like
Integrated, yeah, absolutely. Okay, so we will work together. We'll make sure I'll get that on the schedule. Any day work for everybody, obviously. Or is it good team meeting days where it's right after our team meeting? How does that work? I mean, granted, we have brokers open now. So.
Thursdays, Fridays usually days.
Fridays? Thursday, Friday? Okay, sounds good. Perfect. So we'll get that on the schedule and we'll make sure that we roll that out for you. Perfect. Thank you so much. Okay, Ellen, have our closings?
Do you want to go first or?
Yeah.
Oh, yeah, oh, I'm sorry.
Yeah.
Okay.
So we can get, yeah, save the best for last.
Okay.
Absolutely. Okay, closings real quick. Angel Estrada, 3rd Street, Azalea, Peter, Astronaut, Syrup Road. By the way, happy belated Peter. Your birthday was yesterday, so I know that's why you're not in the office. Inventory, Mount Whitney, and Dear Fortuna, Prestige, 50th, and Dana, the Nella Circle. Congrats. 9,714,000. Congratulations. Woo! All right, price reductions. Team Whitney looks like it's from last week as well. 30,000. 11 Coyote Lane, Carson. So okay. New listings. A-Rod. Is A-Rod online? I don't think I saw her. Okay, so it looks like 24230 Governor Avenue in Harbor City for $899. 16310 Van Ness in Torrance, $780. And Blanca, are you online as well in Victorville? Yeah, we're everywhere. Okay, Nicole or Gordon or 37th Street?
That's like a 2,800 square foot house for lease, 4 bedrooms, backyard, and then there's a walking path up to like a viewing area where there's a big view. This is South Shores area. We already have a ton of people interested for lease. Yeah, cute, clean, older house, but clean inside.
Awesome, thank you. And then John, are you online with us as well? And congratulations on your first lease listing. He just joined our office and look at that. Congrats. Oh, it's lease?
I think so.
Oh, even better. You see? See what happens in this office? Love it. It's all in escrow. Okay, needs, wants, and coming soon.
We need a condo under 500,000. We're like desperate. We have like 2 more weeks to find something.
The 2-bedroom one, correct?
Yes.
Yes, okay.
So if you hear anyone talking about it, let me know.
Okay, sounds
You
good.
are looking for, so
Buyer. I'm a buyer.
you buy for
Yeah.
which area?
South Bay, they're really flexible, even to Long Beach, but they love to be like Torrance, San Pedro, River City, Lomita, really open.
Do you mind putting on the Hello shares?
WhatsApp.
WhatsApp and Facebook here, because I think I saw couple of coming soons.
Okay.
I also saw coming soon the MLS for the South Bay office. Maybe we can take a look at that.
Yeah.
Something that price, I think so.
Okay. Yeah.
Yeah.
Perfect. Awesome. Thank you. Okay. All right, Bill. Welcome,
Hi, Bill.
Bill Greene. You are up, sir.
I guess it's very warming when Al comes up to me and says he's worked with one of our loan officers 20 years ago, so. I don't know if that's dating myself or not, but, I don't even, yeah, he can do it. You can flip ahead. I'll just kind of keep it, I know maybe we went a little long, but I'll introduce myself. My name is Bill Greene. I've been in, mortgage for, many years, 20 plus years. A little bit about House America. Prior to joining House America, I worked for a company called Earthland. Does anybody ever remember them? I was the 22nd employee hired there. I didn't know what it was. I didn't know how it was. Actually, my first convention was at the Carson Convention Center, passing out discs to people online. Interesting story. And when I bought my first house, I was introduced to Countrywide. And when I got introduced to Countrywide, I ended up joining, our founder. His name is Alan Pazeshkian, and we built the largest Countrywide office in the entire US. It's retail offices in Glendale. Our biggest year was around $2 billion. And all of us that joined that group are all kind of still together after 20 plus years. I stayed through the Countrywide Bank of America merger and actually stayed with the bank that entire time. And I rejoined Alan about 1.5 years ago. I actually managed the South Bay office here on occasion. That was one of our offices. And I was sharing with someone in here, the Merrill Lynch office was also Robert Ruiz. And I know many of the loan officers down here, whether it's Michael Cohen, Robert Ruiz. I know everybody that, we managed or, helped over the years. We are an independent company. And what does that mean? We're a direct lender. And I'll go through some of the slides later that kind of shows and what the differences are. No one has ever really replicated what Countrywide did, be it through direct lending or the wholesale or, subprime and all the things that kind of happen. I lived through every piece of that, whether it's the REOs, the short sales, loss mitigation. I've kind of seen a lot over the years. We are a very technical group. And when I say technical, most of the loan officers on our team have 10, 15, 20 plus years of origination experience. We are a direct lender. We're very flexible. We move through the market, and the market is really moving. I'll kind of cover that as a market update. But we are a direct lender first, and then we offer many different other types of programs that maybe I'll cover. Maybe you can go through. Everything that we've kind of built and have put together is 100%, like I said, independent. So we don't report to a big corporation. We're not trying to go public. Many of the companies that are like us that have gone public are really going through hard times. So I'll maybe cover a little bit about the mortgage industry itself. We can close a loan in under 2 weeks. I mean, if we need to, we can push it through, whether it's jumbo, agency. When we have to use some of our non-QM or some of the broker channels, that might take a little longer, just depending on the investor that we go to. But we have our own appraisers. So, if we come into the market, you're going to know which appraiser we're going to assign. I think we had an issue with the recent appraisal and kind of are able to actually take that in-house. We don't go to an investor group. We kind of just talk through it and walk through, can we do it? For many of the agents that we've worked with over the years, many of the agents actually come to us prior to taking the listing and say, listen, what's the market doing? Can we get a value check on this property? And we offer that as like a free service. And that's coming directly from our chief residential appraiser. He'll actually give us some guidance on, are we going to have a problem with this appraisal? What's the issue and so forth. I would say, in the last, let me give kind of a market update. If you look at 2020 and 2021, you probably did about 5 years of originations in about 20 months. Just to give you an idea, that's how many loans were literally pushed through the system. And then if you look at January to June, now you look at rates that have never moved up so fast, so quickly, and caused massive disruption in the market, not only from the agency perspective, but could you go to the next slide? Non-QM. And I'll give you an example. I won't say the credit union, but a friend of mine was hired as the regional for a big credit union, national credit union. And in February, they hedged about $8 billion of loans the wrong way. And what does that mean? They were betting that the rates were going to stay the same. And in 30, 60, or 90 days later, they were on the wrong side of that. They're taking probably a $3 or $4 billion loss on that. Just to give you an idea, that's just one credit union. Okay. When we talk about what we have to offer, we have the largest jumbo investor group. We're well capitalized. These are meaning we have our own warehouse lines. We fund the loan. We have multiple delegated and non-delegated investors. We'll talk about that in a second. So I can go to Chase, I can go to Citi, I can go to Union Bank, I can take it to CIT, which is a local Pasadena firm that's just been recently purchased. And we also have non-QM. Now, as a former banker, or person that worked at a bank, I poo-pooed non-QM. I'd be the first one to say non-QM, that's for those other people. I'll tell you right now, non-QM pricing is priced better than agency pricing for investors.
What does that mean, non-QM?
So it's a longer definition, but non-QM are just not traditional mortgages. Okay, so I'll give you an example. If you wanted to buy a $2 million duplex right here in Manhattan Beach, for example, okay, the banks aren't going to do that loan. And if they do, they're going to require 30, 40% down. Okay, we have investors that you can put 20% down on that loan. And if the rents cover the payment, I can give you almost the same rate as a bank would give you. And if the rents don't cover the payment, you'll pay a little bit slightly higher. Now I'm oversimplifying that, but those are the types of programs: bank statement loans, foreign nationals, ITIN. We have a lot of these different investors. And because we do a lot of units and we work with a lot of different agents, we kind of know which investor to take that loan to, where it's been tried and true. Does that make sense? So, we kind of have that. We also have alternate broker channels if loans don't work. In our industry, they call it scratch and dent. Okay, so you have a scratch and dent loan, meaning it can't qualify here, but hey, you know what? We can still get this over to a broker that'll actually, take that loan. This last two parts, I would say, non-QM and broker channel, make up about 30% of the buyers in today's market. Okay, pre-COVID, 10%. So you hear all these names that come up: Luxury Mortgage, Sprout Mortgage, all these different investors. Who are these people? They are the ones providing this alternate financing. And they went through a disruption when the markets changed. They were selling loans at 4.5% in February, and now some of these are already up to 8.5%. Just to give you an idea. Bridge financing. The two young ladies that were talking about the pitch, that investor probably took a bridge loan to buy that property, fix it up, flip it, and now he has, probably in 12 or 24 months, he's got to pay that bridge loan back. So those are the types of things that we can do for these investors. Now, the rates have moved considerably. It almost looks like hard money at this point, but they are available. And as the market contracts, you're going to get the savvy investor, the new investor, and you're going to get the buyer that has been pushed out of the market, right? And then that middle group is the one going, should I move? Should I sell? They're kind of, almost apprehensive at this point, at least for this particular moment. But we kind of understand where that kind of market's going. So I feel like I'm rushing. I'll stop. Yes, sir.
People, they probably don't understand what a bridge loan is.
Sure. So I find this property, El Segundo, right down the street. It's a fixer. Thank you. I was gonna grab my water. I find a property down the street, in its condition, I could probably get it all cash for $600,000. Just to make up a number. But if I fixed it, kitchen, bath, carpet, paint, make it nice, windows, I could probably sell for $800,000, right? So how do you get the money to do that? They call it bridge financing. What bridge financing is there's an investor out there that says, you know what, you give me 3 points, I'll charge you 8.75%, and I'll just give you the money. Nothing, no qualify, no docs, no income tax returns, no this. You're paying a premium, for that money, and then you're going to pay an interest-only payment for the bridge at 12 months or 24 months, and then you pay it back. That's all it is. Real simple.
And with the bridge investor.
It's a prettier word than hard money.
I
Yeah.
was gonna say, it sounds like hard labor.
And with the bridge investor, from what I saw, that we have, if you want the 24-month term, there might be a prepayment penalty associated with the loan. So you definitely want to shoot for the 12 months, especially if you're a real savvy investor, because they can sell within a year. So just,
Now, are you gonna get the appreciation that you did 6 months ago, 9 months ago, 12 months ago? Depends. One of the things with bridge financing at the end of the deal is, okay, you did all this work, and then maybe the investor says, well, did you have permits? You know, what permits? Well, what's a permit? And my guy, he's a contractor, he did all the work. Okay, well,
Did he pull it?
did he pull permits? You know, you can't just rip out electric and plumbing and, you know, things have to be to code. And we've had situations where permits weren't pulled. Okay, well, now how do you go get financing? Some lenders, you know, when I worked at Bank of America, there was not a question. You were getting a permit. Chase, you were getting a permit. Citi, you were getting a permit. But then there are some investors out there that are like, okay, well, I saw the original one. You know, that property is flipping in 2 months, right? And they're probably going to have what, 200,000 gain, would you say, maybe 20, 30%. When you have that kind of gain, the underwriters usually ask, okay, well, what was done? How was it done? Was it done in a working like manner? Were permits done? That's kind of some of the things you have to worry about when you get on the lending side of that. So if you bring a buyer to that property, and I'm sorry they didn't stay, I don't want to make this sound like a bad news. When you bring a buyer to that property, you just have to make sure that they do the inspections to make sure everything's kosher. Good. That answered the bridge question. Okay, good. Let's see what else is next. Okay, well, I kind of went through kind of all of this, you know, when you go back real soon. Literally, this is how the mortgage business works. Does it fit Fannie and Freddie? Yes or no? Stop or go. High balance. Does everyone know, right? Your high balance goes up to $970,000 now. The price difference between agency and high balance now is almost 2 points in cost. And that's an agency cost. The agency slapped that on. I bet by the end of the year, my personal bet, I'll buy you a coffee if I'm wrong, but I bet they get rid of those points.
I hope so.
Now, for second home and investment, they may not, but I think that'll come into, to play. What lenders like us are doing is we're putting this high balance into a jumbo program. So it's a little bit more difficult to qualify, for example, on reserves. Sometimes the DTI may be down to 43 versus 45, but then we can put it in there. Then if we can't do it in there, we go here. Like a bank statement loan, for example. I'm a small business guy, small business owner. I generate $50,000 a month, selling appliances, and voila, I can give you a loan. Okay, COVID was real bad in 2020, so I can't show any income, but I really want to get this house. Okay, if you were paying 5.5 here, maybe you're paying 6.5 here, for example. And then broker, there are loans out there right now that literally they're called no ratio loans. You can get a loan. It's called a community loan.
It doesn't mean that I make that loan.
And there are loans that literally, I don't have any income. All I have is verified assets, and we can do that loan. That's the if all else fails loan. And I just did a loan, Marina Del Rey, real estate agent. She couldn't sell her, she couldn't sell her house, but she wanted to be closer to the beach. And we put her in that loan. And in 6 to 12 months, when she sells the house, we'll get her out of that loan, no problem. Yes, and if you could tell me your name, I'm sorry.
Leslie.
Hi, Leslie.
Hello. So it's interesting that you mentioned that because I've had clients in the past that have a ton of assets, but they're retired, so they have no income.
Right.
So we haven't been able to finance them, even for something like a refinance.
Asset qualifier loan, no problem. We take the amount of money and we divide it by 60 months or 360 months, and that's how we derive the return.
Nice, yeah, because they wouldn't qualify because they don't have that paycheck.
And then again, if you can make it work with Union Bank or Citibank or Chase, we get a better rate. We can make it work. If you can't make it there, you can pay a little bit higher rate. So there's a lot more options. And again, for me, I had always told Alan, he's the person that brought me into this business. I said, if you ever open up your own shop and you own it, it's all yours, and there's not 5 layers between me and the owner, I would love to come back and work with you. And for me, this is a dream come true. This isn't work. This is fun, literally. And I mean, it's a crappy market. I know parts of it are crappy, rates are crappy, but this is one of the best times I've ever had. Literally, this is Because you know why? Well, okay, now I'm going off on a tangent. There's gonna be a lot of consolidation in the market today. Okay, so these companies that went public, Finance of America, Guaranteed Rate didn't go public, but Loan Depot, New American, you know, all of these correspondents that are our kind of direct competitors, it's gonna be big fish eat little fish for the next 6 to 18 months. Because their volume has fallen off so much. The investors that bought those shares are underwater 60, sometimes 80%. They're gonna have to do some consolidation that's coming out. And so we're gonna see a lot of that. The banks, I kind of call them, and I was there, you know, they're one-trick ponies. If the bank wants the client, and the client has a lot of money with the bank, they're gonna get the client. The loan is a loss leader, basically. You know, they're basically giving it, and they've reduced loan officer commissions that work at the bank down to nothing, literally. So they can basically give away a loan, you know, to keep 250,000 on account with them, right? But you're still going to go through the bank underwriting process, the compliance, the questions. Are we clear to close? Well, we were, but we're not now. You know, we're going to get questions at the end. You're going to have delayed closings. You're going to have appraisals that get highly scrutinized. You're going to get, you know, a lot of things because these banks don't want to be on the wrong side if the markets go the other way, i.e. 2008.
I remember that.
Right? Does that all make sense? I don't know. I'm going to stop.
Absolutely.
I don't want to, I'm not a Debbie Downer. I don't want to be. I mean, this is going to be a good market because for you guys, especially, everybody wants to live here. People want to live in this, you know, these 30, 50, you know, square miles. People, I know they want to, you know, oh, people are leaving. No, people are coming.
Yeah.
There's not enough homes for people to live, you know, in Southern California.
Yeah,
You know.
absolutely.
So let me stop there. Oh, marketing support. We have an in-house young group. We've been doing some, you know, videos as well, but we can do property information flyers for you. This neighborhood reports, do you all remember what this? It was a listing report. You would go in and, you know, what's walkable and how many restaurants are close to you. You know, we have access to these. The websites, one of our youngest loan officers, actually 24 years old, he had the most brilliant marketing I've ever seen. He walks up to an agent, he goes, look at this, boom, 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 like 5 clicks. I just made an Instagram post of your new listing. Can I put it up for you? Like that's his pitch.
Don't you guys remember when I did that for you?
I was like, that is the best thing I've ever heard. I mean, instead of, hey, can I buy you a coffee? It's like, hey, can I put your listing on Instagram? Can you be okay with that? You know, and you get an agent that's not real comfortable using it and they'll go, yeah, do it. And, you know, friend for life, right? So, you know, we're small, we're nimble, we're flexible. You know, we're transparent. If we have a problem, we'll tell you. And let me stop. Ask me a question, please.
Where do you live?
Where do I live? Actually, I used to live in La Cañada, and I moved during the crash, and I moved to Stevenson Ranch. So I raised 2 boys. One's at UC San Diego, I'm picking up tomorrow, and the other one, you know, he's got the Machine Gun Kelly haircut. Just in case you see him on social media, you know, about this tall, and he dyed his hair blonde. I don't know. So I got one of each. So it's pretty
No, we look
good.
forward to working.
Yeah, I mean, honestly, I'll share the, you know, like you said, many has got some track record with it.
It's been a pleasure really to work with you know, Bill, Alan as well. Maybe you know, can we bring out one day or
Sure.
talk as well, but the various offices, but it's they're very involved, excuse me, very involved, which kind of resonates with this office, that because of, you know, Gordon, Al, type of kind of leadership and how the dynamic works over here. And I think, you know, it's also like was meant to be with Ish and you guys, how you guys work and support your officers, you know, give more resources. And I encourage you guys just to go to Ish and ask about what Bill just showed about the marketing, etc. Be curious to learn more about those kind of pieces because it's pretty awesome and they have good support as well. So you know, thank you.
No, many, thank you. I mean, you can see my energy is up, you know, I mean, this is the best time, honestly. This is really the best time. It separates the pros versus the Joes. It really does. And it is, when you survive in this market, you know, you're a tougher. You got another stripe on the sleeve. You know, it all comes together, you know, and I'm really excited to work with you all. I do know the area. I don't live here, unfortunately, but maybe one day, you know, when I grow up. But we'll do a lot. I would say the last question, where are rates going to go? We had the high mark, we came off it a little bit, and we're inching up, you know, we're gonna see a little inching up. I think personally, just like the Fed has stepped in every single time that things get out of control, they usually come in and they say, okay, stop the water from, you know, drowning the boat, you know. So no one wants to see the housing market crash, you know, nobody wants to see the housing market crash. That's where the wealth is created. So, you know, we're going to go through a little bit of a pain point. We might see a couple more spikes, but I think we're going to get to a point where we level off. You know, Federal Reserve rates really is the prime rate. That's your HELOC. You know, 30-year rates are the bonds rates. So we watch the bond, 5-year and the 10-year bond. We don't really watch the prime rate as much. What's going to happen this year? Investors are going to still buy. They don't care about the rate. They'll buy, they'll flip, they'll hold, they'll rent. They're still seeing it. You know, the years ago, our company moved to Atlanta. You know, there's a BlackRock. I mean, they bought like 80,000 homes. I mean, literally. So there are investors out there. There are people that still want to buy homes. The average price has kind of gone up, so the affordability has come off a little bit. But I really do think if you have a buyer right now, they're all feeling a little apprehensive. There's no reason to be apprehensive. Once they move into the house, once they get in, it was their best decision. Ultimately, it's generally their best decision.
Can they make the payment? Are they comfortable making the payment?
Yeah.
And I'd rather get them in at this price than at this rate than, you know, a higher rate and a lower price later.
I think I'm over my time, but I want to ask you for the business. I want an opportunity to earn your, you know, your business, and you know, we will be responsible with your clients, and you know, please give us an opportunity to earn your trust.
Amazing. Thank you, Bill.
I'm giving out a gift card for all you guys listening. Sorry, Zoom World, I couldn't do it on a tab.
Let's see here. Is this Chris's? No.
Okay.
There's a Kohl's, there's Tavares. All right, there we go.
Oh, Rebecca Tiedemann, this time we're going to broker today.
She has to be here now, so.
Should we-
Yeah, in person.
Okay.
Sorry.
Please let us know if we win.
Okay.
Please let us know.
Wait, is it being recorded? No, okay.
They had to go get their house.
Absolutely. I have to go get their- Yeah,
I'll figure something out.
Yeah, that's the extra.
Yeah.
it's the extra.
And we'll give it to Ron Villafo.
Yeah.
Thank you.
It was the mortgage. Okay, real quick, we'll wrap it up real quick. We got our spring fling, so it looks like Liz is at 3,900, Tavares at 5,200, Jane at 6,100, Maria is still running on second, and of course, Nicole is still taking the lead. Great, upcoming event. Okay, you guys, I know you saw an email on this. We're super excited. Your staff has been working very hard on trying to put together our summer family event, and we decided to go upstairs and we'll figure out a movie. So movie choices is TBD. We talked to them. We did ask them about Top Gun, but from our understanding, they may not be showing Top Gun anymore by our choice of day that we chose. But Jurassic World is coming out, and bring your little ones if you do have children. So we're kind of, you know, trying to incorporate that. But I think Jurassic World is probably going to be the one that we're doing.
Okay.
So $20. It gets you the tickets, popcorn, and a drink. And actually, a portion of that does go to our KW Cares. So we're very happy about this. So we're super excited. Please RSVP. Save the date. Yes, we need to RSVP because we do have to pick up the book of tickets in advance, and that is something that we have to cover the cost upfront. So please RSVP and send us your money. Okay, karaoke at Karen's, you guys know this, our annual karaoke event is coming back July 8th. Again, another one, please RSVP because we need to know how many of us will be there and how much food we need to feed you. MREA, our millionaire real estate agent, please join our ALC and myself. We kicked it off last week. If you are, when you do join us this coming up Thursday, please read the first fundamental tab. It's not chapters. If you know, you read the MREA, we don't have chapters, but it is fundamental. Read that, and then we'll mastermind around that this coming Thursday from 4 to 5 in person and on Zoom. Book club also is we're obviously kicking off. That's next week. If you haven't picked up the book, I still have some in my office, and our very own Jane Castillo is leading that, so we're very excited.
And I'll have wine too.
There you go. No brainer.
It's on.
It is all like Donkey Kong.
It doesn't matter if you didn't finish the book.
Yeah, just show up.
Whatever you need, just show up.
Yeah, absolutely, love that. Okay, upcoming classes. So we still have the power hour. We did move it to 8:30. So right after our producer's mindset call at 8, we'll role play straight into it at 8:30 every single Monday. Okay. And we're super excited about our basically almost regional event or all of our offices. It's next Monday, June 13th from 9 a.m. to 3 p.m. It's the 5-step system designed specifically for current and future businesses by our KWU. So as you know, we as KW, you guys know that we have a university. And if you don't know, please ask me because there's amazing classes online via Zoom. You just roll in and it's phenomenal.
It's gonna be in person. I think in person only. I don't think they're gonna do a Zoom. Maybe they will have a Zoom. At the South Bay office.
South Bay office, yeah.
Brandon, he's a mega team out here in the South Bay, Team Echo, with his wife, and he's also a team leader out of Colorado. So yeah, full time. So he's there, and he's like, every other week, he's come back to visit us over here. So it's gonna be the whole day on Monday. Awesome session. So just please come by.
Yeah. And if you don't know where our South Bay office is, it's right on Hawthorne. Again, we'll make sure we'll have all those details for you. Actually, if you scan to register, you'll get an automatic link that will be set up. Okay. And today is the day. Michael Lewis, Marketing Suite. You guys training, bring your laptop, 1 o'clock. Ray is so amazing. He will be sponsoring lunch. So pizza is coming as well. And that is literally in a couple hours. So 1 hour, we all will be here. Please bring your laptops if you want to deep dive into Michael Lewis about all our marketing system that I know we've been anxiously waiting for. So please join us.
And everyone will have their username and password by the time the class starts.
Sort of set up, right?
Yes, everything's all set up, correct. Yep. And we still have our KW slide. Few left, limited time. Okay.
Extra small.
Extra small, and that's it. We'll make some money and.
Funny soul.